Hi, this is Kirk with Forex Trading Secrets. Today we want to talk about a trading path to follow. Now these are proven steps that you can follow to become a profitable trader. What do you need to get an edge in the market? Well, first of all, to get an edge to become a profitable trader, you need knowledge. Now, not just any knowledge, because there's all kinds of information out there, but you need correct knowledge. There are courses out there that teach you how to use every indicator, but they don't tie them together to teach you how to actually make money using all those indicators. You can use every indicator, but you don't know how to use any of them together. That's the inefficient knowledge. They're giving you correct information, but it's not taking you any place. And tools. You have your trading platform. We have a scanner. There are tools to bring things, trades to your attention. Also, don't underestimate the having traders to collaborate with. In our situation, it's a PIP club, and you can come and trade with other traders and talk and be involved that way. And then you need to get a lot of experience in a short period of time. So we'll go over some of these things through the course of this webinar. But now we're going to go to some charts and show you what we're talking about as far as knowledge and correct information. So what we're showing here is a 4-hour chart. This would be one of the time frames that I use as a directional time frame, and I'll show you how I would do that. But on any time frame that you use, there's one key ingredient that you need to be able to determine, and that is there's impulsive and corrective moves. Impulsive, corrective. Now, this is not new. This is something that's been going on ever since the trading has taken place. The market moves and surges in an area, then it rests or retraces and takes a break. And then after a while, it says, okay, I can't even keep on going. I'm going to turn and go the opposite direction. And we've seen that over the years. Let me just zoom out. You can see an impulsive move. It's a corrective. It's the end of an impulsive movement, and this is a corrective. Impulsive, corrective. Impulsive. Now, was it total corrective? Well, if you know how to read it, and we can look at this is actually telling you that it was going to change directions. And that's one thing that you would need to do also, is learn how to determine the directional changes in the market. But the thing you want to be aware of is we have an indicator right here. You notice that when it is red and below, that's in an impulsive move. And then there's a corrective move. Look what the price bar does. It's an impulsive move. Look what's happening here. When it's going really, it's kind of drifting down, but it's still not moving very good. And then there's a corrective move, and there's one little impulse before it turned and went back up, and then did another corrective and impulsive move. So we'll talk a little more about this particular area in a moment. That's the first thing you want to be aware of is the market being impulsive or is it being corrective? Okay, how do you determine the direction of the trend? Well, one thing you want to do is go to a larger time frame. You could actually use this 4-hour as a time frame, and you could also use the day. Let's start with the day first, and then we'll go to the 4-hour. One thing you can do on the day is look for a color change. That is a momentum indicator giving you the direction of the trend is changing. Now that also lines up with a color change on another indicator. Those two together, that's called an early bird special. So that's saying, okay, that is the direction that might be wanted to be traded. So we know that from this vertical line right here on the day chart, that says trade short. Okay, let's look at this line right here. That is an early bird special going long. That says keep on trading long. Now, why would I say this is a impulsive move and this is a big move, this is a corrective move? Well, there's a thing called CDC. It's convergence, divergence, and congruence. Right here on this line, the market told you that move up was probably over and it was going to take at least a break. Worst case scenario was going to take a break and go sideways. Well, in this case, it actually turned and moved a nice move. Now, on a day chart, that moves a lot. So I'm going to look, this is like 300 pips, and up here this is looking after the fact, but we'll look at the 4 hour and see how to read this. That's 400 pips. So this is telling the direction. That's all you need is the direction. Just look at that one color. As soon as that turns blue, trade long. As soon as it turns red, change short. You don't have to worry about all the other things necessarily, but it's better if you know more things, but that's going to kind of give you the direction. Move this anchor right over here and go to the 4 hour chart. Okay, this is where that first line was that we drew on the day. It turned blue right there. Well, right here, that's the direction. So what we're doing is showing you steps as to what you need to do to be able to get into these trades. So this step would be in this case, it's a 5 alarm trade, but it's also a saddle buy. You may not know what that means, but those are terms that you can, when you recognize them. Did it go against it? Yes. And did it go in your favor? A lot. Okay, but if you're trading the direction of the trend, you may have said, well, I'm going to take this 80 pips and I'll get out to make at least 50 pips on that trade. Then I'll get back in going long again. The point being is the day time frame gave you a direction. Yes, there's always going to be some retracement. That's the impulsive and a corrective move. This one you don't see it so much, but I'm going to mark it with this little box right here. Now I'm going to go to the 1 hour chart. You see a corrective move right there. The 1 hour told you it was a corrective. So if you know how to read these indicators, you could have said, well, this is going to retrace, but I know it's going to go long. So when it turns and goes long, I'm going to trade in that direction because I want to trade in the direction of that trend of the larger time frame. Now there's another strategy we have that's called a candy bar. And the reason we do that is because that's such a sweet spot to be trading. I'll show where the candy bar would have told you to enter the trade. Even right here, before this saddle buy, it was just another confirmation. It was before the swing high by 20 pips. So there's signals telling you that because it moved up, and this is a corrective move, and the 4 hour doesn't even show a corrective move, that this is just kind of a little hesitation, that's the direction you should be trading. So I've used 3 time frames, and they all told you a story. One told you the major direction, the second one confirmed that, and the third one actually timed it better. It gave you 2 entry signals if you had decided to get out of that trade. So if you're taking a trade over here and decided to get out, not to go wait through this time right here, that's okay. But what if you'd gotten in, you waited here and re-entered over here? Now you have 2 positions going. That's taking advantage of the full trend. That's maximizing your profits by adding on to a trade. Okay, now I talked about how, let's just look at this other move down before I go on. So remember when this was on the day chart, it said that's heads up, you may want to consider trading down. Okay, this 4 hour chart agrees with that. And what does this 1 hour chart do? Well, it agrees with it also. Okay, here's an important, powerful concept. People say, well, how do you know which direction of the trend to trade? Look at this indicator right here. See, it's below the 0 line. When did it go back above the 0 line? Right over here. So which direction would you want to trade during that move right there? Short. Okay, now we know that we've marked it right here. Here's a little corrective move where the price opened, it went short, came back up, and then it went above where it opened. That's a corrective. You don't see it in the momentum indicators, but that's where the larger time frame did a little retracement there. Now we go to the 4 hour. This is what it looks like on a 4 hour right there. That's where it was retracing. Then it continued on down. Now let's go back to this 1 hour. Now we've marked this one section right here. I'm going to zoom out. We know the major direction is short, so what do? We wait until, if you want to trade that direction of that trend, till this crosses below again. That's the direction that you would be trading. So find the major direction, which is short, because it's red. The 4 hour confirms that. You can see in between right here was that 1 hour where it was below the zero line. You see the 4 hour was where what it looks like when the 1 hour was below the zero line. Okay, this is where it went on the 1 hour. I'm going to put a line, the anchor right here and go to that 1 hour. See that 1 hour, this is where it went above the zero line right here. Yeah, it did go below, but it was kind of really hovering there. See what happened here? That's that corrective move on the 4 hour. You saw what it did on the 1 hour. It seems like, wow, that's overwhelming. Well, it isn't once you get used to understand. If you understand it on one time frame, then it doesn't take long before you understand the whole move. Now, what if we had said, I'm going to trade the direction of the trend of the 4 hour. As long as it's below this line right here, I'm going to stay in. Now we've got this part's the 1 hour, and this part's the 1 hour. Let's go over here where the 4 hour ended, right over here. Well, you can see that it went and made a nice big long move up at that point. But let's see what that 1 hour did at that point. The 1 hour gave us a potential move going long. So depending on which time frame you're using, you could have traded that as well. But let's just go back to keep on the direction here. Now, how do we know when the market is going to change directions? It's called convergence, divergence, and congruence, CDC. There's a setup that when that happens, then you know that there's heads up. Maybe you better take a look to see if the market's going to be changing directions. And you can tell it mainly on the way the price bars are moving. If they're moving down, I'm going to leave all these vertical lines on here for so we can look at this a little closer. That's what the price is doing. It's moving lower lows. But right here, we have, this is called converging. This line at the bottom and this line at the top are converging. They're coming together. And so that says right there, heads up, things may be changing. A worst case scenario, it's at least going to slow down. And you can see that it slowed down and actually turned and changed directions. Let's see what that looked like on the 1 day. Well, the day didn't tell us anything. It didn't even show us that this was going to be a hesitation, but the 4 hour did pick that up. Now let's go look at the 1 hour, the same place that we've marked this. We don't even see the 4 hour. You can see it barely was marked down here. So I'm going to go back to the 4 hour and put a vertical line right there. And I'm going to change the color of that line so we can see that that was the area that we were looking at on the 4 hour. So the 4 hour said, hey, maybe something's slowing up or changing directions. Vertical line. Okay, that's where the 4 hour said, and the 1 hour eventually caught up with it, and it went above the line, and so then some move here that you could trade it. So once that 4 hour said heads up, then you could go to the 1 hour and start looking for trades going the other direction if you want to trade that corrective move. I'm going to zoom in now. Now let's look right here. See, the price was coming down right here. It said it was slowing right there. It told you that that was going to be at least a correction. You see how that's converging? It actually started telling you right here, then it made another surge, another impulsive move. And it went right here and said, okay, that's maybe you want to get out. It gets kind of choppy. Then it breaks and goes above the zero line and comes back down. So now you know that you're okay to still trade there. But when that 4 hour said that was going to change, maybe that move is over. So you can see that the market's telling you, okay, yes, I'm slowing up, but I'm not stopping. And so it keeps on going. It was a little bit choppy in this area. This is the area that we were looking at right here. Now, if you're trading in the direction, let's just kind of take some picks here. There was a 40 pip move there. Here was another 20 pip move. Right over here, the whole thing went down 48, but there was a retracement. So if you just took that part, so there was a good 20, 30, 40 pip move right there. See right here, another move in that direction for 30 pips. So it doesn't tell you that it's going to turn. It just says, well, you got choppy, but there still were some good trades in there if you understand the impulsive and corrective portion of what the indicators are telling you. This is a whole trend right here. And we talk about sweeping a trend. How do you get the most out of that? Take that line off. I'm going to leave these on because this is one move on that 1 hour where it's below the zero line. The trend is down. So a couple things you can do. You can either trade this coming down and ride through this. I don't necessarily do that because it comes back 100 pips. Why should I lose 100 pips? Take the profit is my thinking. Then re-enter and come on down. So then you're trading this whole trend right here. Then it did say on the 4 hour that it was going to go back above. Now you have to decide whether you want to use this over here. How would you do that? I'm going to take this blue line now and duplicate it and move it over to right here where this 4 hour started saying it was going short. What does the day bar tell us? Well, it's below the zero line in both these the indicators, the MAO and the AO, and but it's blue, so it's kind of mixed. So you have to decide, well, what am I going to do there? But here again, move this over 1 day later. We talked about a early bird special. Now we go to the 4 hour. You know, the 4 hour is starting to give us some heads up. There was 60 pips and another move down after that. But let's go to the 1 hour. Below the zero line. Below the zero line. Saddle sell. See, that's kind of how you can read the market, looking at a larger time frame and take advantage of what the market's telling you. That's sweeping the trend by knowing what's taking place. One thing we've been doing that I just didn't tell you the name that we have for it, and that is salt your trade. That is search all larger time frames or search all lower time frames. So if you're in a larger time frame, you search the smaller time frames. If you're on the smaller time frame, you search all larger time frames. So you kind of figure out where the market's going. So salt your trade is one of the things that we talk about also. And then you can create watch lists based on how these indicators are moving and how things are going. So we talked about how to find the trend, how to tell when the trend's coming in, impulsive and corrective moves, how to use different time frames, how to take advantage of all the movement on a trend and maximize your profits. So now part of the path is a home study course. We have a course that teaches you all those things that we're talking about and gives you a good trading foundation to develop the skills. It's called Nth Degree. This is the key to having a winning, consistent trading career. Now we've had an overview of what's in the Nth Degree. We've talked about some of these things. We talked about finding the trend, multiple entry and exit. We talked about exit signal. We talked about entry signals. We talked about maximizing your earning potential by taking advantage of the full trend and how to find that, how to find high probability trades, finding the direction of the trend and then timing it down to find a good trade. Now the course goes into more detail on this, how to develop your trading skills and to get up to speed quickly. These are the things you're going to be covered in the course material. The only problem you'll have is if you decide that you don't want to follow what the course is telling you. Well, I know more than that, so I'm just going to take the trade anyway. Just learn to be patient and wait until the signals tell you what it's going to be doing. We do have a PIP club. We talked about coming and learning how to trade with people. There's 3 days a week, and you're welcome to do that. So go to our website, forexstrategysecrets.com. Scroll down on that page you log into, whether you have the course material or not, and you'll see that it says PIP Club members, visitors welcome. Click on that. You're welcome to attend the PIP Club. So what happens in that PIP Club? We'll analyze trades together. We have trades brought to our attention. We're creating watch lists, and we also have a good time. We enjoy each other's company, but we're good friends. One person had taken a trade because of his skills yesterday, and he made over 100 pips on the trade. Another person entered that same trade, but he entered it in the European session. He took out 50 pips on that trade. So they closed it during the trading room because the market started turning. And then we had people taking trades during the session also, and we made some few pips there. So can you see that there's a possibility that you could become a consistent trader? You could spend less time in front of the chart. You could trade with more confidence and trade with less negative emotion, and let the trades come to you. That's part of the thing that you have to learn how to do, is to become patient and let the market tell you what it's going to be doing. So then you can go to sleep without worrying about your trades or worrying about whether you're going to miss something. The individuals I talked about, one of them opened the trade and he was awake the whole time it was open. The other one went to bed and woke up and still had it going his direction because he knew how to manage, but he wasn't worried about which direction it was going. So with the nth degree, you'll be able to become a more disciplined, mechanical, consistent, confident, successful trader. The nth degree course, that's a part of the path. It's an education, it's correct education. We have hundreds of students that tell us that this proven trading system has changed their lives. They now have a path to follow to become successful. And we have now taken that over the course of the years, and we've developed some fine tuning on it, and we've come up with some other strategies. Now, I talked about some of these. You may not have known what I was talking about, but we've come up with the nth degree plus, 8 additional strategies. Now, I'll go through some of these so maybe you'll remember what I was talking about. So what is the nth degree plus? Well, here are some of the strategies. I talked about convergence, divergence, congruence. That tells you when the market's coming to an end, when it may be continuing in a direction, and that's a very powerful piece of information right there, learning how to read that. That particular point has turned trading careers around. That's what that means. Oh, I understand now. I was always getting in just as it was getting ready to turn. Now I can see that it's going to turn. I won't do it anymore. And then he just became very successful. First and second legs. This is so powerful. First leg is slightly profitable. If you don't want to take that one, that's okay. The second leg is where you really want to be looking for your bigger trades. Sweep the trend. That's taking the whole trend that's taking place. Talked about a blue light special, a couple of color changes there. A camelback, I didn't talk about that. Candy bar, that is a trade coming out of a retracement or a corrective or a corrective move. Once you see a corrective move, start looking for a candy bar for an early entry going in the same direction that the overall trend was going. Trading in the zone. And that's when you see indicators. You notice that some of them would turn a color and stay a color for several bars. Well, that is a zone. You get 2 or 3 of them that are all going in the same direction. That's a powerful zone to be able to trade in that direction. And then you can use the different time frames to manage that. Salt your trades. We talked about salting your trades, that search all larger time frames or search all lower time frames. So wherever you're at, if you see something, look above or look below to see what's going on in the market. And then create watch lists based on the things that are setting up. So what else do we have? We have 21 Trading Lab webinars. These are answers to a lot of questions that people had brought to us over the years about the course material. So this is additional information to help you get answers to what your questions. There are 2 acceleration coaching webinars. That's to show you how to get up to speed quickly. And we have the US Pit Club 3 days a week that everyone's welcome to attend. And that way you can ask questions. We usually answer them right there. Sometimes we may wait till the end. If we're trading, we'll wait till the end to answer them, but we can't answer the question. So you're not just getting some material and then never have answers to, well, what does this mean? How come this is happening? What's going on here? And with the course, you have the Fibonacci course. Now, if you were to buy this all separately, it's $1,297 what it would cost you. But we have it all together because of the webinar. We have a link we can give you for $697 is the course material and all the information you see there. Here's the link. I'm going to come back to this link in just a moment, but I want to let you know that you can contact us at jen@forextradingsecrets.com or give us a call. But I'm going to leave it here on this link.